All right, before we jump in today, let's give a quick little update. So I used to be running this YouTube channel as a weekly Bitcoin kind of update, share my thoughts, ideas on the market. And then I'm making a little pivot here. So I was doing it weekly, and what I found is that it was more of a quantity versus a quality of the video. And then I started to go down the path of chasing all these Bitcoin treasury companies, right? Because there's a lot of content. There's always something going on. And I found I started to go down that path more aggressively than I originally planned. So I'll cover Bitcoin treasuries. I'm going to continue to cover Bitcoin. But I wanted to do it at a less forceful cadence, right? Weekly. And I'm going to put these out as events strike me that are going to be meaningful. So I'm going to focus more on quality. So maybe there's going to be a jump in content from week to week or month to month based on what's going on in the marketplace. Sometimes it might be a little more quiet, as Bitcoin is, and that's actually what we're going to discuss today. We're going to dive into how boring Bitcoin can be until it's not, right? We've hit on this a little bit in the past, but we're really going to dive into that a little bit more. So wanted to put that little PSA out there that continue to put this content out, but it's going to be based on quality of the content that I have to share and also based on really what's going on in the marketplace and what I think is going to bring value to the community. That's it at the end of the day. If I don't have anything that's of value, it's just filler, I'm not going to do it, right? This is a passion project. It's not monetize this, and I'm currently not monetizing it at all. And it's something I do because I've got a lot of this insight knowledge. I spent a lot of time in the Bitcoin space, and I just need to get out of my head and share with the overall community. So that's what you guys are going to get. All right. Maybe it'll be more, maybe it'll be less, but I'm going to focus on quality here. So for today, this is going to be a quick hitter. And what we're going to do is we're going to talk a little bit what I just mentioned of Bitcoin might be acting differently. And I've been having this feeling this cycle. This cycle is a weird cycle, right? We're used to the FOMO and just this exponential growth and then these big drop-offs. And ever since 2024, when they opened up the ETFs and institutional money came in, Bitcoin's been operating differently, especially this bull market. And maybe that's the new norm. Maybe we're rolling into a blow off top. And just so you know, sometimes I'm right, sometimes I'm way wrong. Based on my past predictions, I looked at the marketplace. We went through in great detail and identified where I believed the blow off top was going to be, the top of the cycle. And I said October of 2025. So this is September 9th. So we are less than 2 months out from the end of October, right? And my prediction was 265K. Just as a reminder how we got there, a bunch of different ways. We looked at the Bitcoin power law. We looked at a lot of different stuff. One of the fun ones was just working backwards, right? So we looked at the drawdowns from the previous all-time highs to the lows, with the floor being around the previous all-time high. So if we know what the previous floors were, right? Last time it was around 19K, it dropped down to like 16, right? So it was close within that range. Previous all-time high, 69K. Let's say that that's going to be the new floor for the upcoming cycle. We work backwards based on the drawdowns. The drawdowns have been reducing by about 3% per cycle, which would get us to about a 74% drawdown. In order to have a 74% drawdown down to 69,000, we would have to be up at 265,000 by October. Again, October was based on usually we hit that all-time high 12 to 13 months after the halving. 12 to 18 months after the halving. And then when we looked at it, it was December, November, and then I'm going to say December, right? Or October. So that's kind of the philosophy, and this was all based on the last 3 cycles. Now, Bitcoin was a lot less mature, and it was retail driven, right? So that's how I got the 265K in October. We're at 111 right now. I don't see us getting to 265 in the next, less than 60 days. But that means something different. We could be in an all new cycle. And this is where it could get really interesting. Okay. So, what I want to do is I want to show you the trend I've started to notice in this cycle. And if this plays out, this could be drawn out a lot more and a lot more boring. But that means it will find its way into less FOMO and more conviction, which ultimately will drive this thing higher and higher. Okay, so let's take a look. So if we go ahead and we take a look at this here, all right, what we are looking at. All right, so what we have here is this current cycle, okay? And what we're going to look at is there is this stepwise process that's kind of happening where we get into these boring trading bands. Some instigator happens, we jump up dramatically, and then we consolidate. I'm not even going to say consolidate, I just say we trade within these bands, jump up, trade within a band, jump up, trade within a band. If this continues, this cycle will look a lot different and be a lot more elongated. And there's several reasons that I believe that we could be looking at a different cycle. The odds say no. The last three cycles, XYZ happened, it should happen again. But I do believe the macroeconomics have changed. We have institutional involvement, which I do think changes the market. So let's pivot. Let's say we jump up to 200,000 in the next 60 days, where we can come crashing down. Fine. That's a repeat of the previous cycles. What I'm going to show you is a difference in what the future could look like. And it's going to be a lot more boring, okay? But that's okay, in my opinion. So what we're looking at here is this right here was the previous cycle, okay? So what I mean by that, this is the bottom of the market, right? And so if we take a look at the bottom of the market, now bear with me, the 532 days, we dropped this trading range was from 32 to about 17. So that's about a $15,000 trading range, okay? Now, what I want to look at here is, yes, it's 532 days, and I'm talking about finding these bands. That's the bottom of the market. That's a transition from a bear market to a bull market. Divide that by 2, you're at 265 days, something like that, right? If we talk about a transition period, fine, so be it. So let's just say around 200 days, okay? Now, what we do is we take a look at, all of a sudden, we've got this big jump in green here, okay? And that was a $24,000 jump from 32 up to, let's see here, 32 to 55, right? Or what was that one? 70. Anyway, so 126 days it took to jump $24,000 in price, which is a 70% increase in price. Pretty substantial. And then guess what? For 252 days, we literally, from 69 to 56, $13,000 trading band, okay? We sat there for 252 days. And now that trading band was a 24% increase, just kind of bounced around 24%, right? For that period of time. Then, all of a sudden, this is the Trump inauguration, a pro-crypto environment, and it took 30 days. It took 1 month, a few candles, to jump way up. So we got to this previous all-time high, right? Let's say, I know we got above it. We got to 74. But the previous all-time high right here, you can see, was 69, right? Once we got there, we chopped around for a long time. Now we have this big impetus, right? We jump up to 105. 30 days, okay? $50,000. All right? Why are these numbers? These numbers are a little off, so bear with me here. Is it from the 55? Yeah, maybe we're going with the floors, from 55. Anyway, 50% jump in price, okay? Then we find this trading band. And again, we're in this 32%, about $26,000 difference. We're going from 105 to 79. Again, there's wicks, there's candles, but I'm just finding the trading ranges, and we get this tight trading range, okay? And it's boring, and we get used to it, okay? And now the question is, this data isn't enough to say, are we gonna see a big jump and then find the next trading range? Or does this just happen to stay consistent for longer and it just moves up and now this is the overall trading range? I don't know, right? Nobody knows. However, let's put this back. So if we operate under the model that the market is different, okay? And with the market being different, what we see is some sort of impetus, jump up in price, trading range. Jump up in price, trading range. Jump up in price, trading range. So the next question is, what could that jump up in price be? Okay? So right now, right, what we're looking at is what 110 to 124. And again, these are just I kind of bump these down. I don't go off the wicks. I go off more of the body of the candles. Anyway, so we've seen about a 70 days that we've been in this range, and it's been about 18K trading range, right? Which is a lot tighter than the other ones, into 18%. So we've got 24, we've got 32. This one's 18%. So could this be a transitional period to the next jump potentially? Is this a trading range? It doesn't quite feel like it, to be honest. And do I really see us staying this tight trading range for over 200 days like the other ones? No. I feel like there's a jump that's going to happen, right? And this is we're in this kind of funky spot. Like, we don't know what's going to happen. If there is the jumps, let's go ahead and take a look at what those things could be, okay? So if we look at a potential increase of 30%, okay, off of this previous trading range, what we're looking at is $136,000 as around the next benchmark for the trading range. But if we look back, these jumps have been 70%, 50%, and I wanted to get conservative here around that 30%, right? So around that 136, 140. I could easily see us jumping from where we are to about that range. Now, let's say things get a little more interesting, okay? And we see another 50% jump. I don't know what it would be. Maybe it's the Fed, several more rate cuts, becomes a very bullish, dovish environment. There you go. Maybe it is we wait until May of next year. Jerome Powell's out. In between now and then, there's a bunch of rate cuts. Trump puts somebody in office who is pro, lowering the 10-year interest rate, all that kind of stuff, and we just get this wild market. That can happen, right? I don't know what the impetus is, but if there is a strong one, 50% gets us to 157. Let's call it 160K, right? 70%. If we see another, and this isn't one of those overnight. This was an overnight 50% jump, right? This was over. What would that be? 3, 4. No, this would be over 4 months of just a consistent run up. I think we might see something closer to that. I don't see. Trump was overnight, right? We go from one regime to the next regime. Boom. You've been holding that beach ball into the water. It's gonna release, right? This one feels more like this longer burn with a lot of headwinds that just haven't been released, right? So there's all these strategic reserves that's kind of fizzled out, but you see Russia talking about how U.S. government's just playing games. They're gonna go stablecoin. They're gonna go Bitcoin, and yeah, it's to get rid of the debt. Yeah, for sure. Like, you guys are calling out what you're just saying, what everybody's thinking. So and then that creates the game theory, right? And then all these different countries start buying it, and there's more and more saying it. But they're going to do it in a they're going to try and stay under the radar. Why would you share with everybody that you're buying up swampland in Florida to build Disney World? You're not. You're going to keep it under wraps, right? So here's the deal. I kind of have a feeling that if there is a run-up, and I don't know if there is or isn't, but if there is, I feel like it could be a slower grind up. And this, I wouldn't say slow, right? Going 70% in, literally 3 months is wild. Maybe that's what we see, but maybe it's 50, 60, maybe it's 70%. But it starts in September, October, November, December, January, February, March, April. I mean, we've got quite a bit of time before uh, the Federal Reserve. And again, I come a lot back right now to what's going on with the interest rates. Um, Trump's been wanting to get those down dramatically, right? Partly to do with the debt. Also, it's just going to make markets run. I've got a strong feeling that they don't want it to run too early, right? So the primary or the midterm elections are going to be in November of this upcoming year, right? In 2026. What I could see happening is working, 6 to 9 months out, which puts us into Q1, Q2 of next year when they really want to make this thing run hot. That's right around the time that Jerome Powell will be out. He'll be out in May. They also he's trying to fire one of the Federal Reserve members. I mean, she's going on trial not trial, but they're making instigations about mortgage fraud, all that kind of stuff to get her out. That moves somebody else in. That would be a Trump appointee. Now you've got a swing in the board, more Trump supporters. Then you get Jerome Powell out. I mean, all that stuff is just things that I think could play into this. Ultimately, that would lead to a run-up in price as we get these interest rates down. That's Q1, Q2 of next year. That goes well beyond what the typical 4-year cycle looks like of what we've experienced in the past. And now we're looking into 2026 for a top. This actually, this is what I originally said was, I don't know, 100 something days. I don't know where this 126 days came from. October 27, 2025 is when I thought we would start to see this peak. I'm not feeling those vibes anymore. So we can get that run up to 106, 140, 160, 180K. And that's just the next trading range, okay? So hear me out. That's the next trading range. Then the question goes, do we grind higher? That's where we get into the 200K plus. I don't see us going from 111 a day straight to 200. I see us making a stop off at one of these areas and then grinding our way up. The question is, when is this all going to come? When's the bull market going to come to an end? I don't know, right? However, there was this quote. Let me get this here pulled up. I found it very interesting because I was thinking about this, and I think this is starting to kind of play out, right? So this is Plan C. He's on X. He goes, what if the earlier Bitcoin cycles were nothing more than the product of a retail-dominated FOMO-fueled market? That's what we hit on, right? All of this is the very first cycle in which institutional money is involved through the ETFs, BlackRock, all the big boys. First cycle ever. That would likely change the game, right? So what if from here on, Bitcoin simply grinds up to the right with long, drawn-out, uneventful 10 to 30% corrections and consolidations? Well, let's pause real quick. What are we seeing here? Let's check this out real quick. So if we go from literally the wick to wick, there you go, 33%. That's in the range, 10 to 30, 33%. And those are wicks, right? So, I mean, if we go bodies, let's go bodies. We'll go about here to about there. 24%, right? 23, just call it 24 to 33%, right? Okay, all right, that adds up. Now, let's try it again. Let's check this range out. We'll go wick to wick. And what are we looking at? 32%, right? What if this is the game that we're playing? What if this is the game? There's going to be the 10% here and there. But what if we just live 30% drawdowns as we just grind higher? We do a 30% trading range, and we just sit there. And we sit there for 252 days. We sit there for 8 months, 7 to 8 months at a time. Then we rock it up. Then we sit for 7 to 8 months at a time. Then we rock it up. Then we sit for 7 to 8 months at a time. Now, if this occurs I think it's going to bore people to death. I think it's just going to be a lot of smart money and highly convicted individuals that get in. But the FOMO is what brings new people in. And so the scary part is I feel like there's not going to be as many newcomers because it's those crazy peaks that get it on people's radar. Say, hey, I can't ignore this anymore. And that's what did it for me. I can't ignore this anymore. I have to figure it out. Okay. So if you're in now, good for you. Obviously, anytime you're in Bitcoin, good for you. But I'd just be curious to see who gets in on this, right? There's going to be smart money, obviously. You're going to have people that figure out good entry points based on that 30% drawdown, right? They'll play the wicks, and then they'll wait for the upside, and they'll play the next wicks down. It'll be interesting. So anyway, and every time we enter one of these consolidations, people selling think the cycle is over and that Bitcoin will drop 50 to 8% of the time. 50 to 8%. So they can buy back lower, but it never does. Finding your entry points is important. Instead, we just keep grinding slowly to $1 million over the next 7 years in a very boring and underwhelming way as Bitcoin continues to gain acceptance and adoption from the traditional financial system and major players. It's feeling like that, at least for this cycle. So that plan C, I've been thinking about that. I was like, man, this guy hit it on the nose because this is what my gut's been, it's just what I've been feeling, right? So I want to share with you guys. All right, so let's take a look at one more thing. I always show the Bitcoin power law, but let's keep it simple, right? So what we're going to do is, you get the gist. Trading range, jump up. Trading range, jump up. Trading range, usually the trading range is about 30% trading range. Then we're due for a jump up, okay? And these trading ranges aren't short. We're talking 7-8 months of just boringness. And right now, I mean, 252, 224, you cut that in half, we're right around that range. We're due for some sort of jump up, right? If we operate within those trading ranges, again, nobody knows. All right, so let's go. Let's really zoom out here, right? So this is looking back from, let's go to the previous run. So this is from 2013 up, okay? And we got to blow off top. What I did, I just put this into logarithmic, okay? So let's take a look here. Let's remove logarithmic. All right, this is a little harder to plot, right? Well, let's go logarithmic, makes it easier to plot. Now we're not talking raw numbers, we're talking more percentages and growth. Here you go. This looks very similar to the Bitcoin power law. This is just a logarithmic chart. And you can see here, the floor has been pretty darn consistent. And here's the peaks in these bull markets, right? With these ranges, of course it doesn't show me. I mean, we're looking here, I mean, I can't zoom all the way up, but this already says 228, right? And it's like, okay, cool. Like, well, you can get there for sure. Because we're not even near any of these peaks. So here's the thing. If you look at this big run up and then the crash. Run up, crash, run up, crash. But here's the thing. We haven't seen the run up, but it's just grinding. And you can see here, we're grinding just a little bit. It's just staying just above this floor, right? Over and over and over above. So here's around the floor, right? We're at what, September here, 15th, sure. The floor about 78, 80K. There you go. We're staying above this, so we just keep grinding. I mean, here, look at this. If we here, let's plot this real quick. So if we take this chart, okay. Here, I'm just going to run it like that. Let's just keep it super simple. We'll just hit these peaks, okay? So we run this out to, let's say, October of 25. If it goes parabolic, I don't see it, but if it goes parabolic, there's your 200, okay? More realistically, let's say we just grind it out on this little trajectory here, okay? And we just keep working our way higher and higher and higher. Let's run this out to the end of the year, okay? End of the year, 140. Okay, so be it. That's at the bottom without any of these peaks. We go halfway to the middle. You're at 166. Let's go out to May, right? This is when Jerome Powell is out. We've got a new chair of the Federal Reserve. You're at 175. And then let's say this thing starts to peak out. You're at the 250 mark. I mean, guys, this is looking interesting. on the log chart. Okay, here's the deal. I'll wrap it up. What we're looking at here, we've got step ups, trading ranges within a 30% spread, jump up, 30% spread. I think we're due for a jump up. Then we sit boring through probably, I don't know, May when more craziness happens. Then we run up. So we could look at, let's make a prediction that I'll get wrong because I'm good at doing that. Let's say that the next trading range is between 140 and 160. We sit there for a while, and then we wait until Q2 of 2026, and then we jump to 200K. I'd say that was a fun bull market. 200K would be a great number for this cycle. And then we just see if the cycle, we have that big drawdown, or is it 30%, 50%, or we just keep grinding higher in this style until some black swan event comes along. There you go. Like and subscribe. Keep stacking those sats. Stay stubborn. You're going to see these at a less of a consistent cadence, but hopefully higher quality, or just more interesting topics. So there you go. Appreciate you guys. I do this for the community. Like and subscribe. Put your comments in. Would love to engage and interact. And number one, I do this to give back. I do this to engage. I do this to learn for myself. Please put topics in that you want to know. Anything of interest. It could be boring. It could be off the wall. It could be wallet stuff, which I never talk about. But that's important too, right? So if there's something you guys want to hear, put it in the comments. I'd love to engage directly, build out topics around what you guys want to hear about. So again, thank you. Have a great one.